This is Duke University.
I focused on 3 gaps, not that they are exhaustive, but they're 3 that we're encountering as advisors and as intermediaries in the impact investing set of activities. So these were 3 that we really encounter, I would say, on a regular basis. The first is a gap between the articulation of interest in impact investing, the rhetoric, if you will, and I think, to be honest, there's a lot of authentic rhetoric, that people are sincere in their language and their desire to explore impact. But there's still a gap between that articulation of interest and writing a check and participating in transactions. There just is. And that gap exists whether we're talking about high net worth individuals, whether we're talking about family offices and foundations, as well as pension funds and insurance companies and more institutional investors. And I think that is both an opportunity for practitioners, but a challenge. I think there is a gap in the analytical frameworks that we're putting forth. As we get to then deal transaction negotiations, if what we're trying to focus on is a total return proposition, we need better analytical tools to help investors understand that total return and not allow them to put impact in a silo, in a story. That's the story behind my deal, but my deal is simply a risk-return analysis based on the numbers. And the third is in the ecosystem. In the World Economic Forum, ecosystem pictorial, I've indicated that we fit as an advisor intermediary in that picture. There are few of us, quite openly, there are few of us dedicated to impact. There are lots of good transaction professionals walking the planet, many, many good firms and good practitioners, but there aren't so many who dedicate 100% of their work to an impact agenda. And I think we should have the expectation of a professionalization of our industry, and that we should be encouraging and seeking to build and strengthen more intermediaries in the process, because I think deal structuring is still underdeveloped, and I think there's an asymmetry between those seeking the capital and those providing the capital that is not necessarily healthy for the future grounding of the industry. There is a certain set of expectations that any investor will have, and they need to be ready to meet those expectations. And that goes across the board, from their business strategy to their product and service, the execution of that, their operational systems, their governance, the management, confidence and the depth and breadth of management. A number of things go into that assessment, and I think it's very important to look critically at a business and to help them ensure that they are ready before they go into the transaction conversation. On the transaction conversation, what we have learned is that you really need to spend the right time on the structure. You need to get the structure right. How much capital does this business really need? Over what period of time? What type of capital? What pricing of capital to enable the business to, again, achieve its objectives? Because that's what we're all trying to do here, is to align the capital to support the business in its delivery. So I feel very good that in our experience we have sharpened our own ability to distinguish between those 2 phases, if you will, of activity. Of course, there's a gray zone in between, and you need to be nimble and work back and forth, because even after a transaction, there are ongoing capacity needs to address and to strengthen. But I do think a mistake can be made if one tries to raise third-party capital when an entity is not really ready for that. Over the next 5 years, I believe we are going to really move the needle on demonstrating that impact investing, if that's the terminology that we maintain, and it may not be, but what we mean by deploying capital to address developmental, social, and environmental challenges in a sustainable way. That engagement, I think we're going to move the needle, that becomes an enduring approach. That it's almost, I think we're going to see that when we're not doing that, almost becomes the default challenge. Wait a minute, why are we not thinking about that deal through that lens? And there is a spectrum, and I don't want to suggest that we shouldn't apply it across the spectrum, just the opposite. I think we should apply that lens on everything that we look at and see. And we won't have reached that goal in 5 years, but I think that we will be much further along than where we are now. The second thing, I think we'll see a multiplicity of players. So implicit in what I'm saying is if that perspective becomes more embedded, I think we will see more actors in the conversation and engaging both as investors, as entities seeking capital, and as other players in the ecosystem, namely the intermediaries. So I think we'll see a burgeoning of participation and a maturation of skills and experience, and I think that's quite exciting.